completing the product shelf and building what Brian Armstrong calls the everything exchange, getting like one of the key financial products components in there is options, could either take years or do it in one go and pay. And that's what they decided. Let's say compare it to a supermarket. If you buy milk in supermarket 1 and supermarket 2 is closer, you buy the same milk in supermarket 2. That's more like the spot business model. If you look at derivatives, you buy a 6-month option. It's a contract. It's like a bit like a marriage. I think the ecosystem is pretty good. So OKX is here, Binance is here, Bybit is here. It makes it very efficient for us to operate, for the lawyers, for the entire ecosystem. The custodians are here, several hedge funds are here.
Thank you very much for joining us on the New Money podcast today, the show where we talk about crypto and hopefully find out how exactly the future of money looks like. I'm excited for the episode. Back home in Germany, Luuk, you're joining us from Dubai, and we're going to talk all about the Coinbase deal, of course, the largest crypto acquisition in the short history of this amazing industry. We're going to talk about the Deribit platform, what's it all about, what's there, what's coming, and then we can spend some time talking about operations and geographical expansion and a number of exciting new things you've got in the pipeline there. And without further ado, Luuk, great to have you on board, and thanks for joining us today.
Thank you for the invite. Glad to be here.
Awesome. Well, Luuk, you're CEO of Deribit, the world's biggest cryptocurrency option exchange for BTC and ETH. I think like 85% of market share on the options market, and most recently one of the largest crypto acquisitions to date. Coinbase bought you guys for $2.9 billion, and the deal is now officially closed. Congratulations. How does that feel?
It's actually quite nice. We worked hard and long on the transaction. You can imagine that a deal like this requires some regulatory attention, legal due diligence, financial, etc. So overall, doing a deal like this takes a lot of time. But then once you're finally agreed on terms, you need to get regulatory approval, which also takes multiple months. So all in all, actually closing the deal takes 3/4 of a year. So in the end, we closed mid-August. So looking at mid-December now, it's still relatively fresh. So when looking at how did it all go, are the teams on board, is everything integrated? Far from it. We just got started. But I think being acquired or merged, as we like to call it jokingly, pretty special from like a 4,000 person company versus 175 staff companies. We're like small in most senses when you compare us to Coinbase. And being absorbed, of course, from the outside was a bit frightening. That was initially the stance of a lot of our team, keen to see how, or a bit anxious to see how this would evolve. And the first 4 months in are actually quite positive. So the teams get along, the people, the mindset is the same. The ambition is to conquer the world and build great products and to do it fast and not to have too much bureaucracy. All the stuff that we feared is actually not true. So I think the sentiment is very positive, and we're moving towards Christmas. So everyone is like, the vibe is very nice, actually. So yes. So your question, how do you feel? We feel quite positive.
Interesting. Yeah. And so I empathize with you because 2 years ago, I bought a company for like a 2-person Finnish company for like €4 or so. So it's like practically the same. And even that was a painful process. I guarantee you. Was there any number of questions, maybe like zooming in on this idea, like, hey, people were frightened. What does it feel like? And then now, like, things are looking optimistic. Is there like candidly speaking, I don't know, like a postpartum depression where like now it's not yours anymore in a way, or was it just like fully operational the day after?
Oh, Deribit remained like standalone in a way, right? So we are a regulated entity. We have our own hardware, our own system. So it remains operating as it was before, and at some point we'll connect all the systems. So you can imagine that over the longer run, as a, let's say, platform operator, which is essentially what Coinbase is, you want to align a lot of the policies and procedures and align staff and make stuff unified. So KYC, AML, market surveillance, but also stuff like internal audit, enterprise risk. How do you look at your operation and is it as efficient as it can be? Obviously, there's lots of room to grow. But that will be done over the next, so somewhere in 2026. And it's a lot of work. You can imagine that it sounds simple, but all the onboarding stuff, its database is full of client information. So it's sensitive, it's GDPR, it's different approaches. So we ask whatever X number of questions and they ask other stuff. So how we're going to do this. So this requires a lot of team effort to fix. So post deal depression, no. I actually think obviously it's different for me before and after, right? So I'm part of a bigger group and I have a reporting line and all of that stuff. But I'm also part of a bigger group with a lot of firing power. So for us as a small company, growing and getting new clients and growing the product and getting access to certain regions goes this fast. And with Coinbase Reach, you can go this fast. You can roll out your products faster, better. You have regulatory reach, political reach, all the stuff that we never had. So for us, yes, we're a small part of a bigger group now. That might feel disappointing, but actually I think the overall shared feeling is that we're now part of something big and we're pretty proud of our product. Our nice product can actually reach the world. While we were able to grow this speed, I think we can actually race going forward if we do the plumbing correct. So I think the overall excitement, including myself, is getting ready for the next leap of growth. And I think without Coinbase, we would have grown as well, but never as fast as we will going forward. So I'm pretty positive.
Who are you reporting to now?
So if you look at, I won't name names because I'm not sure that's I'm meant to do it. There's all kinds of rules and policies now. But if you look at Coinbase, essentially you have two big units. One is the institutional unit and one is the retail unit. And then you have other stuff like the engineering side, the base and whatever. So we're not connected there. We're part of the institutional unit. So in the institutional unit, there's the platforms. There's like Prime, Coinbase Prime. There's the custody. All of the stuff that's tailored for like billions and the large clients, that's us. And then the retail pillar, which has millions of clients, would be a client of ours. So I'm reporting to the institutional unit. Part of one of the platforms so Coinbase has a spot market, which everyone knows, but Coinbase has an international derivatives market. Coinbase has a US derivatives market. So Coinbase operates multiple platforms, and all of those platforms are let's say, governed from within the institutional unit.
Stupid question, because you mentioned it, right? Like Coinbase has a derivatives market. Why weren't they successful as a standalone business in this space? Like, why did they have to buy you guys to really deliver on the strategy?
So Coinbase has an international derivatives market which offers perps. I think what we offer options. So we offer options and perps, but the options have been tried to be competitive by the majority of the market, right? So we compete against all the big players like CME in the traditional space. Eurex has some options, but also Binance, OKX, Bybit. In the DeFi space, everyone tries to, and having a head start and a focused product. So we do everything what we can to make the product better. So we don't have to choose between 100 projects. All our key projects are options oriented. So we can always outperform the rest and have a better product because we are focused. So our product is difficult to beat. And I'm not saying you can never beat us, because if we get lazy, people will outrun us. But if you remain focused, you have a very amazing product and a good brand, and people will not easily switch. So if you, let's say, compare it to a supermarket. If you buy milk in supermarket 1 and supermarket 2 is closer, you buy the same milk in supermarket 2. That's more like the spot business model. You buy a Bitcoin here or you buy it there, but once you've bought it, you take it home, you have your Bitcoin or you have your carton of milk. If you look at derivatives, you buy a 6-month option. It's a contract. It's like a bit like a marriage. We get engaged, and 6 months we engage, and the liquidity needs to be good in 6 months. And you might want to roll the contract, etc. It's not a spot deal. It's not like your milk carton. It's a contract. You really we expect something from you. You need the margin, and you can expect something from us. So derivatives, especially options and futures, are completely different than spot. So we're difficult to beat because there's like a loyalty to a certain extent, and there's like a client engagement with the platform, and they don't easily move to another platform. If you combine that with best-in-class portfolio margin, proper cross-collateral set, they don't easily move. So your initial question, why does Coinbase buy you and not build it themselves? Because it's very difficult to do and move clients. And they thought it was easier, or they still think it's easier doing it in the perpetual space, and they're actually progressing well, and they have a nice client base and expanding the product. So it's operated from Bermuda. It's an international perpetuals offering. So now there's like almost 200 perpetuals tradable there. But completing the product shelf and building what Brian Armstrong calls the everything exchange, getting like one of the key financial products components in there is options, could either take years or do it in one go and pay. And that's what they decided.
It's interesting. If you think about that loyalty, right, and that lock-in that you perceive having with your existing clients, is that, if you had to pick one, like, is that distribution and like the head start, being early to market, having trusted relationships with client, or is that like product and like all the crazy and good things that you do on the platform? Like, what do you think is like the most important thing here?
In the end, it's product. So you have to have a best-in-class product. So otherwise, the loyalty goes to a certain extent, but you will lose it. And you've seen that across multiple platforms that were early that are no longer there. So they might have had some loyalty as well because they were fun or fast or whatever, but over time they've lost. The only way to win and keep your position, or at least prevent significant losses, is having simply a better product. But if you compare products, so let's say you are a retail client and you think Bitcoin is going to be worth $1 million, and you want to buy a call option because you think it will happen, let's say in March. So you buy March month end expire. And if you compare the price of that very simple product across multiple platforms, I would say we're cheaper, but it's a few dollars and your upside is $1 million. So who cares? In the end, you as a retail client that might be trading at, let's say, Coinbase, the fact that Coinbase offers it, or Deribit offers it, or Binance, it's all comparable. So you would not believe, let's say, Binance to trade on Deribit because you're a happy Binance client. If, however, you want to trade, let's say, a call spread or multiple options, including futures as your delta hedge, including puts and whatever, including some ETH collateral and including a USDC perpetual position, and you want all cross-margined, and you want then to have the best collateral usage and the most efficient margins, that's where we excel. So we of course try to win every client, but where we succeed is in the institutional space and the sophisticated traders. So 85% of our business is institutional, and the rest of the 15 is not like millions of retail clients. It's the sophisticated ones, the ones that care about efficient margins, about efficient collateral, about let's say best-in-class product. But if you simply want to buy a call option that whatever expires in March, and I shouldn't say this too loud, but you can do it on multiple platforms. Only for that to there, but it might be a stretch too far. But the overall belief is that we will become the everything exchange, and then you can trade everything on Coinbase, and you have your options, you have your futures, you have your perpetuals. But who knows? So there's all the stuff being announced very soon, all about new stuff, dual assets, tokenized stuff, equity, perpetual, all of that tradable on one platform, efficient cross collateral margining. That's the future, and the platforms that can offer that in the best way possible, those will win in the long run. But that doesn't mean that the lesser platforms can't operate, because if you simply want one of those features, then you're fine wherever you trade, most likely, as long as it's properly regulated and your assets are secure.
When you drill into what makes a great options exchange great, would you say that this is one of the key things, like the portfolio margining and being really great at that? If you look back at the product history of Deribit, would you say this was one of the things you did well that set you apart specifically? How important is that for the platform?
Obviously, for any platform, liquidity is key. So you need to have proper liquidity, order book depth, tight spreads, that kind of stuff. So that's the lifeblood of any exchange are the order books. So assuming that that's taken care of, then it boils down to what happens after the trade. So the trade is one thing, but your margining, your cross collateral, can you utilize your capital as efficient as possible or not? That's the next question. And in the beginning, that was less relevant because capital efficiency, no one cared that much about it. But now that there's all kinds of ways to extract value from your collateral. You can stake, you can generate yield, you can do whatever. It becomes more and more relevant. And for example, what we offer now is USDC rewards. So you can trade your linear options, use USDC as collateral, but on top of it's not debt capital. You actually get 3.5-4% in yield on top. So those things matter today and mattered less a few years ago. A few years ago was just about liquidity and a proper product. If you go back even a few more years, then it was simply about performance, keeping the platform alive and not crashing and that kind of stuff. But those were let's say the earlier days.
Interesting. And if you think about the evolution of derivatives trading, crypto derivatives trading, I think probably like the big hot thing over the last couple of years have been decentralized exchanges, hyperliquid, perps trading. Do you drink the Kool-Aid of that as much as as other people? Like, how do you feel about the impact of these financial products on the broader market?
I drink part of the Kool-Aid, I guess, because to a certain extent, we should have captured those volumes, and we didn't. So in the early days, there were only centralized exchanges, and let's say the same group of people or partial subset of the original group is now trading elsewhere because they think they can get the same experience. To a certain extent, that's true. But if you look at options specifically, for example, that's a very difficult thing. So again, if you buy your long call expiring in March, you can trade on a DEX as well. But if you want a collateral offset, on-chain is pretty difficult because your essentially your two legs are separate. So capital efficiency, portfolio margining, multiple positions and efficient margin is not really possible on a DEX. So that's the part of the Kool-Aid that I don't drink. So it's interesting for some products and it's less interesting for others. The problem, I think, is AML, KYC, and do you know who you're trading against? So that's part of the problem. And the second problem is perhaps in a way the lack of loyalty, because a lot of people simply chase airdrops and generate false volumes in a way, which on a centralized exchange like ours is not permitted. Every trade that happens is a trade that people want to happen because they want the exposure of the underlying or the product they're buying, but they're not generating volume simply for the sake of receiving something potentially later. And I think that's the combination of the problem with DEXs. But overall, if you take one step back and you fix the KYC and AML problem, it's an interesting product, of course. But will there be more platforms? Most likely 6 months from now, we're having this podcast again, you will mention different names. And that's exactly the problem with DEXs.
So your objection is kind of like, hey, it's like a great business and you should have to a certain extent capture that value, but the stickiness and the revenue quality, the moat is maybe not as deep as people think it is.
If you are an institution, and you can imagine that if you are whatever, asset manager, hedge fund, if you're not like a two-person shop, but you're somewhat bigger, and you need to go to your risk and compliance teams to ask approval for trading on this DEX, it will be a tough decision because you don't know your counterparties. You might be trading against who knows what, where the funds come from. It might be compromised, whatever, stolen assets, etc., or worse. So it's a very tough decision. And when you finally perhaps reach like a decision moment, the volumes might have moved on. So knowing that, would you ask all your colleagues for permission, and the risk team and the compliance team and the regulatory team, and knowing that it's a 6-month project, or would you simply not do it? And I think the latter happens a lot, causing this not to be interesting for institutions at the moment, which is not terrible, of course, but that's essentially the feedback from our clients. So we're more institutionally oriented. So if you ask our peer platforms, they might give you a different response because they focus more on retail, and retail can change tomorrow. For them, it doesn't really matter that much.
And if you think about the future, and if you think about the Coinbase platform, which has Base and which has like decentralized capabilities, are there any discussions? Is there any curiosity around like tipping your toes in this space as well over the next couple of years, or do you think it's just like not your business?
It's not my business, but it's not necessarily not Coinbase business. If you define the everything exchange, it needs to have everything, right? So I think the overall idea is that whatever background, whatever wish you have as a trading client, whatever mindset you might have, Coinbase should have the solution. Does that mean that we're going to launch a DEX tomorrow? I don't think so. But could it be in theory possible that we would launch a DEX? Yes, perhaps. I think we want to service all the trading community, including the people that trade on away markets, one way or another. And would it be DEX? Could it be whatever, wallet service? Could it be the Base? Could it be custody solution? Who knows? But I think there's multiple avenues of servicing these people. But I think the idea would be to capture them all. And there shouldn't be a reason to go to another platform. We want to be the best in class for the entire range. Will we be best in class tomorrow for everything? No, of course not. So I'm not that naive. And these platforms are actually pretty good in what they do. So it's a difficult challenge. But I think in the long run, that would be the wish.
Let's talk about expansion, regulatory stuff, licenses a bit. I mean, we just like for the podcast talked about it briefly. You're in Dubai today, right? You guys moved there. I told you that I think like 4 years ago for me, if somebody told me I moved to Dubai, it was like the weirdest thing ever. And now it seems like a totally normal thing for companies and founders to actually do. And serious people go there. Like, what's your impression of the ecosystem? Like, how long have you been there and how do you feel about it?
I think the ecosystem is pretty good. I personally moved 2.5 years ago, a little bit longer. ahead of the VARA license. So we found for a VARA license, and we picked VARA or the UAE for a few reasons. One is the framework. So it's a good, high-quality framework. It's new, but doesn't mean it's not properly thought through. So it has spot and it has derivatives, and it's like it wants to have like a quality assurance. So they're pretty serious. So we just had an audit. They look at everything. So it's really not easy to get the license and to keep it. So it's a serious model. So, and again, emphasizing the institutional needs, they want proper quality. So that's one of the reasons. The other one is like our clients are in between Europe and Asia. So Dubai is like perfect. It's in the middle. We can fly either way. We can have calls with all time zones. That was, of course, pre-Coinbase. Coinbase is West Coast and East Coast, which is terrible from a Dubai perspective. So you might challenge that decision now. But I think for what we do and what we keep on doing, we're like the non-US entity of Coinbase, covering the globe. It's a perfect place to be. Many peers recognize that. So we are in an area called One Central, which is like the business, one of the business hubs in Dubai, where the regulator is closely is essentially next to us, a few minutes walking. And in this part of Dubai, there's many other platforms. So OKX is here, Binance is here, Bybit is here. So it makes it very efficient for us to operate, for the lawyers, for the entire ecosystem. The custodians are here, several hedge funds are here, but also to organize things. So if you fly to Dubai, you can meet multiple of your key platforms, which is interesting for event organizers, etc. So I used to be in Panama, and before that in the Netherlands. If you look at the stuff that's organized there, it's much less than here. So here there's so many events. People typically, all our big clients would fly to Dubai 2-3 times a year. So we can easily meet them instead of us flying all across the world. Dubai is a pretty good place to be. So I think looking at growth, we will expand here. We will hire more people. I think we're looking at the region. So Abu Dhabi is also interesting. If you look at what we're trying to build is what we call a hub and spoke model, where the hub is Dubai and the spokes would be various parts of the world. So we're filing in Europe for MiFID license, but that would be a broker routing to Dubai. And we deploy the same model elsewhere, where let's say you as a German would onboard to the European broker according to MiFID requirements, the KYC according to certain standards, but not to the Singapore standards because they might be different, or not to the Brazilian standards. So the model is we adhere to all global regulation, but then locally by having local entities service the region. And the dream would be to have all liquidity centralized in Dubai and therefore guarantee best-in-class liquidity, tight spreads, deep books, because we don't have to split the books and have it on an exchange year and year and year. So that's the hope. That's regulatory-wise pretty challenging because most parts of the world haven't. So everyone's working on a regulatory framework, but it doesn't necessarily fully embrace this model yet. So we are having multiple discussions.
And how is the Dubai regulator? Like, are they like uniquely Dubaian, or are they like internationals and same but different? Like, do they have a distinct taste to them, or what's your perception?
No, it's an international group of people. So there's local people and international people with years of experience. So it's I would almost say it's like any regulator in the, let's say, the Western world. The model looks a bit like the FCA, the UK model, the MiFID model. So I think there's like plenty of basis there in how they designed the framework here. But the people are from similar regions as well. It's just an experienced group of people, so they hired from the industry.
And as a European who has emigrated, like, how do you feel about Europe specifically for crypto markets today? Like, are you as bearish on MiCA as I would suspect it, or are you like reasonably excited still?
Depends on what model you believe in, but I think will Europe be the next epicenter of crypto? I don't realistically think so. Will our model work? I do believe so. So that means that Europeans can trade crypto derivatives and will have choice and will be allowed to execute orders in Dubai. That enables growth in a regulated capacity. So now you could argue that people can trade on multiple locations without proper oversight. I think and I hope that will change, and that models like ours will be embraced, and that we can safeguard client assets in proper custody, safeguard whatever best execution, all of that stuff that MiFID and Europe cares about. in the most trustworthy way. So that's our model, and I think that will be within reach. But if you look at who's, let's say, fighting hardest to become like a proper hub, who's allocating dollars, who's enabling people, that the UAE would be a great example. Of course, US, everyone talks about the US, but since Trump, but the UAE is doing similar stuff, and there's lots of exchanges that put their HQ here instead of in Asia or Europe, simply because the model is suitable for us, but also the conviction that our model makes sense and that it results in jobs and economic prosperity and whatever, that kind of stuff, is supported here. And in Europe, there might be different depending on which country you choose.
Hey, many more questions, but looking at the time, let's jump into a round of quickfire questions, how we like to call. Which competitor do you respect the most, both from a Deribit as well as a Coinbase perspective?
Perhaps two different answers. The way we've built the platform has an institutional focus. So the way we did it in the past, not having the license, etc., is gradually building, and you need to build proper trust. So you need a proper custody model. We wanted ISO certification. We want SOC 2. You want audited financials. It sounds like pretty simple, but it's rather complex. And from a hardware perspective, you want low latency matching. You want the proper data center, etc. So who operates those markets successfully? Of course, those are the large players in the institutional space. So that would be whatever, CME, Eurex, etc., Nasdaq. Those guys are really good in what they do. So they deserve praise because it's not easy operating such a market. If you look at our peers in the crypto space, of course, it's easy to criticize platforms, but if you're able to service millions and onboard and KYC and whatever, all keep the data secure, adhere to security requirements, don't get hacked, whatever, that kind of stuff. The key platforms, of course, deserve a lot of praise because it's pretty impressive what all of them did. So yeah, let's say a handful in the traditional space as well as the crypto space.
Gotcha. Can you pick one from the crypto space that you think is apart from Coinbase, obviously coolest?
So regardless, so we compete against, in theory, these guys should be our biggest enemies. But I think, of course, we know the people and we meet them here and there. But the platforms like Binance, OKX, Bybit, they've done a great job in just building, each they have their own niche, but building what they did is pretty impressive.
Was the Coinbase acquisition opportunistic, or was that a structured process where you had the bankers and the multiple offers?
Yes, so pre-Trump, we appointed a bank called FT Partners to help us with let's say shareholder issues. We're looking for some secondary liquidity, and at some point the interest grew from buying a minority stake in buying everything, because post-Trump, several of our peers, including Coinbase, realized that the doors might be opening. It becomes a rat race who can offer the best product and the most complete offering. So no, but it was a structured product. We had a lengthy due diligence done or whatever. It's nice to experience, but I wouldn't wish it upon anyone.
Well, I appreciate that. What's the most underrated geographical market in your opinion?
Underrated geographical market? And it depends on how you rate markets. So in our case, the US would be seen as the highest rated market, right? So all US persons trade options. So from an options perspective, the US would be very important. Other markets, perhaps like Europe, so Western Europe, the Netherlands, from an options perspective is big. Germany, Euro stocks trade massively. So they are respected markets from an options angle, but less recognized in the rest of the world. What typically people don't know is the size of India. Indian exchanges and volumes are the biggest options markets in the world. So, I wouldn't say every Indian person, but lots of them trade options. So it's a big opportunity and less recognized by, let's say, the global markets, because everyone thinks Europe or Singapore, Hong Kong, and the US are the biggest and most successful markets. But India is massive when it comes to options.
Very interesting. And a final one, what's one decision you would make faster today than 5 years ago?
Hiring people, I think. So we've always tried doing more with, let's say, the same people or pushing people to do more, but I think that slows you down in the end. So some stuff, you simply need more stuff.
Hey, awesome. Luuk, thanks so much for taking the time. This was lots of fun. I appreciate you being on the show.
Thank you for having me.